Firstly, a quick apology to all those that attempted the webinar last night. It seems we're destined to do it tonight, the 1st of August, the first day of the August month. Yes, so apologies for that. We were double gremlin there. I'm going to give you a short BTC USD update. The link for the career run, which will work. We have done this before. We're usually good at it. We just were hopeless last night. Jump on. It's in the notes. So you'll see the usual market sniper with visiting the site, and then you'll see just this 1st August webinar link. So if you come onto this clip after the 1st of August, that link will not be useful for you. But anyway, update on BTC USD for those attending tonight. And if you weren't scheduled and you see, go to the Market Sniper and register, you can come and jump on as well. If you weren't already registered, we will be doing it tonight. A quick update for you on BTC and how the lie of the land is. So it was squeezing, and then I said, nope, it looked like she was rather going to invert. Too many capitulations in the mix. And in the end, I did in fact take a few shorts. Yes, so anyway, let's get on to BTC USD. I will have my favorite short and long that I will really give to you. The long for the bull market tonight on the webinar, and one that when I want to hedge that I've been shorting. When you short, you've got to remember you've got to have some liquidity. So I sometimes do use BTC, but at the moment we're in a bit of a environment where it's been broadly long, so I did put a small amount on only because I could see it was going to sell off, but I'm taking off very quickly because broadly I'm bullish. So I want to stay mainly with the trend. I think this is just a natural correction to a very decent push up over the last period. You've got to remember we were 6.5 at the base of the head of the inverted head and shoulders back here. So round about there, you were at the level of, in fact, is it 6.5? It could be less. Let's just see. Yeah, 5.763. Apologies. It was around 6 on this shoulder. 5.763, and you've run all the way up to 8.5. So, you know, that's almost $3,000. It's not the end of the world that you have a corrective sell. It is rather capitulative, but we've pushed up with quite a few pumps. If you take a fib all the way from the top, give me the Fibonacci, please. You can see that this will still be within the normal realms of corrective moves. What is that broadly? Well, you can even go right the way to a 61.8 correction. This is just a tick above it. I would suggest it's going to run probably through it into this area here. You might not see the cursor with that fib now in the way, but where we had a previous wind up and a bit of a rejection candle there in this dark blue to light blue area here, also at the 61.8. So I think a little bit of basing out. That hammer isn't good enough to hold broadly, a little bit more basing out, but I would say at some point it should start slowing down. I start to get a bit concerned if it comes all the way back to the 38.2. This was of course necklines for the main inverted head and shoulders here, this red line here. That was the classic 6.775. If you remember me calling it 6 3/4 on the way up, and that was a market sniper entry just below it on the fractal HVF. So that's kind of where we're at. We've not yet even run the 61.8. So it still falls into a corrective pullback after the slap in the face event that was the 8.5 run and the Winkelfoss's ETF and other FUD. But it's more about the fact that it's done quite a lot already. So it's in a early stages recovery cycle in my overall view, but this is a correction to it, and I've given you the levels that it starts to become a concern. It's still okay to revisit the neckline, but you would see that as a bit of a disappointment, but I wouldn't want to see it go below that, because then you are negating this, and then it means that on a larger time frame this has been nothing more than a rally, and we're just now in a chop period which could reaffirm bear if it takes out new lows. So that might sound a tad confusing, but I'm giving you all the aspects to it. Anyway, so bit of a spill, and there was momentum in it, and this was that top heavy structure that I gave a little warning that it could go the other way on, and it has. So what next? It's run the natural target for that, and it's also run into major key levels of significance, and this structure was over here. It's what I'd call a retrospective draw, that only in the benefit of hindsight you wouldn't have traded it for its quality of structure, but you could see that there was a push up from here and it did perform. That's with the benefit of hindsight. It's not something I would attempt to trade, and that's laid down funnel structure just here. So it's kind of the reason why I expect we've slowed down and we're going a little bit lower volatility. See that candle for that 3-hour period, quite low range, and currently now quite low range. So some of the zip of the fall is coming out of the move. The volatility and the average true range, which is the candles full from high to low structure, is shortening again. So that points to, okay, we're not panic selling quite on the same scale anymore. A bit degree of calmness is coming in, and that's a forerunner potentially for basing out. However, if you form a sort of rising wedge structure, it can just be a calming period before another reassert spike down. So we'll have to watch and see that. But this is in what would be typically called a correction. So correction means you are in a bull rally, and you're having a correction for having moved up as much as you have. And the corollary of that is a rally, which means you're in a bear market and you're having a little bit of a relief rally. So when you use the word rally and correction, just bear in mind the context of what you're actually mentioning and what it should be. So this is a corrective move for us. And it's met its target, but it has scope for a little bit of overperformance as well. So we'll just have to see. I'm sizing down now. I think the easier gains have been made. So my short position is very small and is very tactile, and I close it quickly because I am overall biased long. And the only reason I have a small BTC short is because I was hedging my other coin exposure on the alt side, which we'll tell you all about tonight. That's it. The link is below for the corrected webinar. So I hope that's useful to you, and apologies again for those that took time out and were disappointed and had tech issues. It was from our side, not your side, and it's our bad, and we apologize for wasting your time on that point. Come around again tonight and we will be zippy and ready for you, and we'll have an extra little bit of an insight for you in terms of our take on a good alt to be short for large parts of the period, particularly in weak periods like now on a corrective rally, and a good alt to be long in the bull period, our favorite number one on both those sides. So two little look-ins, which I'll do at the end of the webinar. And of course, amazing content on how to play great defense. So the link's below, and apologies to you all for our mess up. Thank you and goodbye.